Hello, hello. So yesterday we had a great day for Alibaba as it was up almost 4% and even more at some point. But today, after reporting its earnings, we're going back to the negative, and it's currently down at about 8% as we're entering, the market open today in about 15 minutes as I'm making this video. So I want to take a look at what has happened and tell you a few things that are happening right now that you may not be aware of regarding Alibaba. And the first thing to start off, I always want to refresh a little bit just to see whether there have been any changes because obviously this is live and the market hasn't opened yet. And if you take a look at our social trends module here, you will see that there is a lot of discussing around Alibaba right now, but with negative sentiment, basically telling you that something wrong is going on with the stock right now. And our stock news module here of our tool can tell you what is happening at a glance. Spin-off plans fall down to earth, and spin-off gets cancelled pretty much. And they also announced their earnings report. They beat on profit and they announced dividends and many more things that we're going to be talking about. So first things first, let's take a look. Alibaba shares slide over 8% after it sells cloud spin-off, citing US chip restrictions is what happened here. And the company said US chip export restrictions have made it harder for Chinese firms to get critical chip supplies from US companies because of the pretty much the issues that are happening right now between the US and China, and the chip supplies pretty much, and the bans that have been happening throughout the US. So we believe that the full spin-off of Cloud Intelligence Group may not achieve the intended effect of shareholder value enhancement. So they think that the potential spin-off that they have announced a few months back is probably going to hurt the company rather than actually help it, and so they seem to be cancelling it right now. So the thing that I want to examine first is what happened with the earnings report. And you can see that here Alibaba reported net income attributable to shareholders of about $3.8 billion, which is below the estimate, but it's significantly higher than what has happened in the previous year, pretty much, the previous quarter of last year. And revenue met expectations, however, coming in at about 31 billion, which is still up 9% year over year. So this is not a huge deal. Maybe the stock would have gone down just a little bit with this announcement, maybe even not. But the important thing that happened is the fact that they announced that they're not going to be going through the spin-off. And one of the things that the market hates, generally speaking, this is not only Alibaba, is uncertainty. So things when things happen for which the market, the Wall Street pretty much doesn't know what is going to be happening in the future, they hate that, and this is why you could be seeing a lot of people dumping and a lot of institutions in some situations potentially even dumping. They don't like uncertainty, and it's understandable. So uncertainty causes fear, and when there's fear around, people tend to sell. So this is why you're looking at about 8% down right now. It looks like we're going to be approaching $80 for Alibaba. Now, Alibaba's US chip export restrictions have made it harder, what I told you about earlier. The fact that they have troubles with the chips is what doesn't allow them to continue to go through with what they have announced in the previous years. And the company still intends to list its Cainiao Smart Logistics division in Hong Kong. One of the divisions that has been announced is this one. And so, yeah, this is what's happening right now. And there has also been another interesting announcement here. They are paying their first dividend. Now, if you have been following my channel, you know that generally speaking, I'm not a huge fan of dividends. I don't like them that much for various reasons that I have analyzed in the past. One of which is now the stock tends to become more like an income stock and not so much of a growth stock. And I'm not a big fan of extracting cash flow. I prefer the companies to grow when they can do it, of course. And this is a company that can definitely do it. Now, the good thing about it is that they are paying $1 per share of the stock, which is about I believe 1% is what I was reading at a different news piece here. And so the aggregate amount of the dividend will be roughly 2.5 billion. This means the amount that's going to be paid out to shareholders pretty much every year. And so going forward, we will continue to review and determine the dividend amount pretty much. And once a company starts paying dividends, they typically tend to increase it through the years. So they typically tend to announce increases as years go by. And again, this can be regarded as a good thing for some. I'm not a big fan of it, but if it's low and it's easy for the company to pay the dividend, so basically the payout ratio is not that high, so they can cover it easily. That means, then it's okay. But generally speaking, I do prefer the company to not extract cash flow when they can do that. And the Chinese economy, yeah, Alibaba's results are often viewed as an indication of the potential health of the Chinese economy and the consumer, understandable. And the economists have been expecting that there would have been a boom after the COVID lockdowns have dissipated, or after the whole crisis that has been happening in China. I think it will still happen, but it has been lagging, that's for sure. And Alibaba said it recorded healthy year-over-year growth in users. Now, this is something that I'm going to be talking about a little bit later in the video, because there is some interesting things to see here as well. I want to be talking about the positives and the negatives so that you get a full picture. Now, interesting thing here, actually, this is another article that I was looking at. And this kind of, examining different articles helped me to get a better perspective. So, in some articles can actually talk about positives, some articles can talk about negatives. So you kind of want to see what has been happening throughout different news pieces so that you don't get a distorted view of reality. So, for instance, what I told you earlier, net income was 26.7 billion won, compared with a net loss of 22.5 billion won over the same period last year. So it's easy to see that the company, hasn't made as much as the analysts have been declaring it would make. But you may be forgetting how badly the company has been doing the previous year and how much better they are doing right now. And so remember, the earnings reports and the earnings pretty much is a game of predictions. And so when these predictions are not right or they are not met pretty much, then you could see all sorts of different movements, and in some situations may not even make too much sense. That's what the market is. Now, another interesting thing that has been talked about, and I have been seeing it online, is Jack Ma's family trust is selling 10 million shares in China's Alibaba, potentially causing even more fear. People potentially fearing that he's selling out of Alibaba completely. Now, he's selling about $871 million, which is significant for sure. I believe he was holding about 3.7%, is what I was reading online. I couldn't find the exact number of shares, but I found a percentage, which is 3.7% is what I found in his latest report, meaning that he owns quite a lot of it, and 10 million is just a fraction, a portion of it. But you have to remember that Jack Ma has also sold when the stock was very high, when stock boomed pretty much back in 2020 is this article, when he sold about 8.2 billion worth of stock. Now, obviously the stock was significantly higher back then, but still, it's not like it's his first time selling a lot of stock. He has sold quite a lot of shares back then too, and actually he has cut his stake from 6.2% to 4.8% back then. So this is important to understand, because you may be seeing that he's selling some shares and being too fearful about it, but it happens, and at some point people who own shares want to cash them out, want to get some money out of them, so it does make sense. Now, on a more positive note, an article that I found here is China's annual e-tail frenzy broke records. Trust us, says government. Now, that's a little bit sketchy here. Alibaba and JD.com back this up. And basically, there has been a discussion about the revenue that was generated by the 11/11 Singles Day e-tail frenzy, as it's being talked about here. And so JD has talked about a few stats here, how much they have sold. So transaction volume of Apple products surpassed 1.4 billion, for example, 1.4, more than 300% increase in screen mobile phone, folding screen mobile phones, things of that sort. Again, the percentage increases here are insane, 300%, 100%. And another interesting number they chose to mention, yeah, obviously, they potentially could be choosing to mention the interesting numbers here for their sake, was a 362%. This is still pretty impressive, percent year-on-year increase for 11.11 sales to its European brands. Interesting to see. And so you could potentially be looking at a better quarter pretty much for the next one is what this is telling us here, and potentially get some data about a recovery in Chinese economy as well. So interesting to see. Another very interesting thing here, if again this is reliable, the Bureau reported that across the 10 days of 11/11 related shopping action, it spotted 5.26 billion express delivery packages, up 23.22% year on year, with 639 million shifted on Saturday alone, that was the 11th. That is up 15.76%. So again, it looks like we had some good sales here going on for the company. But right now, again, as we are looking at the stock, it looks like it is going down because of this news. And again, if you take a look at our metrics page, and you will see that as the market is about to open right now, we're sitting at minus 8%, sitting at $80 pretty much. So we're going around about $80, which frankly is insane. It's going to go really, really low in regards to price to free cash flow ratio, about 10% lower right now. So we're going to be looking at about 8.5 or something of that sort in price to free cash flow, and the PE is going to be even lower. So if I didn't hold, I would potentially be salivating here, because we have talked about Alibaba. It's definitely cheap for what it is right now, and yeah, I've made tons of videos about it. At 80, yeah, it's to me it's really, really a no-brainer, frankly. But I understand the fear that people would be having after these announcements. But remember, it's all about uncertainty, and the market moves because of that. That's what I wanted to talk about in regards to Alibaba. Stay tuned, I'm preparing things you will see in the next few days. Interesting new videos, and I'll see you soon. Bye-bye.